Hello, good afternoon. I hope all of you are doing well and you've enjoyed the first day of the FIS so far. Welcome to our panel, Can AI Make Markets Perfectly Efficient? Now the debate is not all that uncommon. In the 1960s, Eugene Fama introduced the concept of a perfectly efficient market and the debate's been going on ever since. And technology has always been at the intersection of what has managed to make markets more efficient, be it the invention of the electronic ticker tape or even the internet enabling large-scale, at-scale online trading, or sophisticated algorithms enabling high-frequency trading in this century, which have been a hallmark of slightly more efficient markets, at least in the recent decades. What we want to do today is debate this topic. We want to get views from three kind of leading voices in the industry who bring the intersection of data, AI, finance amongst the three of them. And hopefully this will be an interesting conversation. I'll be your moderator today. My name is Karan. I'm an associate partner at QuantumBlack, AI by McKinsey. And I have with me Boris Eykher, co-founder and CEO at OpenMineral. OpenMineral is a digital native commodities trading platform. I also have with me Eric Poirier. Eric is the CEO at Addepar. Addepar supports over $7 trillion in asset management for both investors and advisors through an online trading platform. And finally, we have Uljan. Uljan is the CEO at Domyn. Domyn is a company that leads solution building with AI that focuses on responsible and trustworthy AI in highly regulated industries such as finance and administrative government. Before we kickstart, I'd just like for you gentlemen to quickly introduce yourself to the audiences in a bit more detail, and we can get into the discussion. Boris, you want to go first?
Thank you, and thank you for having me here. I'm a CEO of OpenMineral. We are a commodity trading platform, so we help to move physical commodities around the world. We operate in 40 different jurisdictions around the world, specializing in the mineral raw commodities. And we have the biggest data lake in the industry on which we are running some machine learning. So I'll give a couple of the real-life examples how technology could be used in today's world.
Eric?
So I'm Eric Poirier. It's a pleasure to be with you all today. Addepar, we started the company in 2009 in the wake of the global financial crisis, after having spent a few years before that building Palantir's finance platform. So for the last really 16 years at this point, we've served the high end of the retail space, single and multifamily offices, then we've expanded into private banks, wirehouses, and increasingly now institutional asset owners. So really in every case, our enterprise scale tech and data platform is bringing together all the data about our clients' portfolios so they can see everything both broadly and deeply in a timely, accurate, complete way. So overlaying that with appropriate data governance, and with the now more than $100 million a year we're putting into R&D, all the advances in AI are simply accelerating the insights we can surface for our clients and the high quality actions they can take.
Thank you. Uljan?
Thank you. Good afternoon. At Domyn, we enable organizations in regulated industries not just to use AI, but to own it. We believe AI is going to be existential as we move forward, as it literally revolutionizes the way companies develop their intellectual property. So our mission is to turn every organization into an AI company.
Thank you so much. Now, before I open up the meta question and a very definitive question on will AI make markets perfectly efficient, I just wanted to ask the audience very quickly with a show of hands, those who believe AI will make markets perfectly efficient, if you could please raise your hands. Amazing. I see we have a fairly either pessimistic or a realistic audience with us here today.
Practical.
And I'll leave it to the three of you to either convince them or to help them actually reestablish their belief in the fact that AI may not actually enable perfectly efficient markets. But Boris, let me start with you, and Eric and Uljan, please feel free to come into the conversation. What do you think efficiency is going to look like in the future with AI? Especially with generative and agentic AI, bringing new opportunity in terms of how AI is deployed in the financial markets.
Thank you. I think it's the same as any other technology. The efficient markets don't exist because we all try to make profit out of that, right? And if the markets are completely efficient, there is no edge and there is no profit. So we all know that's not going to be happening in reality, and everybody will be working in figuring out how to get an advantage over their competition in having a small edge to be able to take advantage of the inefficiencies. So I actually agree with the audience, whether they heard the question or they couldn't have heard that.
Yeah, I'm relieved that the audience agrees as well. Look, AI is a natural extension of a lot of the advances in tech for many, many decades at this point. I do think, at least from our observation, many investors are spending most of their time on like fairly mundane operational aspects of making investments. That's one area where we're already seeing AI make massive advances in ingesting data, normalizing data, processing data, so you can actually spend more time considering different investment decisions. And then once you've made the investment, reflecting on what worked well, what worked poorly. But practically speaking, from the perspective of any investor, of course, as a goal, people want to maximize returns on some level, but their preferences, their objectives, their time horizon, their risk tolerance, those are all distinct. And in many cases, you really just have to factor in the organizational identity and really take that into account. And hence why markets, in my belief, will never be perfectly efficient, but you can make them much, much more optimal from the perspective of each investor to better achieve their goals.
I think even before we talk about intelligence, AI is helping markets with data integration. So if we look at the inefficiency that is out there, there is a number that actually, every time I look at it, it's unbelievable. The US alone is losing more than 2 trillion a year because of the bad quality of data and bad quality of software. So what this means for markets is that as companies digitize and they become more integrated and they tap into their information, especially this is excited in private markets, we're going to be able to have not just more efficient trades, but also more inclusive markets. So I like to think of AI as a translator of complexity that will enable that capital markets union that we have been talking a lot about.
And do you think that translation of complexity will specifically apply to retail investors, with institutional investors still kind of focusing on human gut? Or how do you kind of see AI coming outside of the operational efficiency that it can bring to, trading institutions and more to the trading floor itself?
Yeah, I think first of all, putting companies on the map. Most of the market is not on the map, so the data that investors have about companies today is really small compared to what it can be. So when we talk about thousands of data points, we have both a quality issue and a depth challenge. So for investors, what this means is that they can now tap into these very rich data sets that is augmented by AI, which is not just about information retrieval. We're talking a lot about RAG and conversational agents. It's a lot about correlation. It's about context intelligence. So being able to infer actually insights about one company, but by looking at the cluster of other companies that are similar to that.
Eric, it seemed like you had something to add there as well.
Yeah, more as maybe a conceptual exercise. If you just think about global markets, right? On one side, you have the world's capital, which again, each investor from a small retail investor all the way through to world's largest sovereigns' pensions. And then on the other side, the world's best ideas, best teams that you can evaluate using, again, in a data-driven way. But to the point, many of these best ideas, best entrepreneurs are kind of off the radar from the perspective of most investors. And so by synthesizing, by unifying the world's capital, the world's best ideas in a more organized way, I'm a very deep believer in markets. And I think if you can create more opportunities for the right type of capital to find the right type of idea, double down when it's working, maybe pull back if it's not working as well, that's, I think, ultimately how you get to a much more optimal state, both for the entrepreneur as well as for the investor, while conditioning on the fact that every investor, again, is going to have their own preferences and their own constraints.
Uljan, you mentioned that AI has the potential to create more fairer and inclusive markets, but a common theme of concern I hear from people in general when talking about the financial markets often is that there's potential for monopolization of the more complex or more cutting-edge AI within the large kind of institutional investors trading kind of entities. What would that actually mean for retail investors?
I think we have an opportunity to democratize this tool for everyone and close the divide. It depends a lot on how we are going to feed the beast, because AI right now is centralized. It's a beast, and only a few companies are benefiting from it. If we rather go for a more decentralized approach, which we advocate a lot for, so where every individual, every organization, they own their AI, they can build their intellectual property. Now with the scale that AI provides, small investors in terms of size, they can have the same powerful tools of big investors. And they can access the same level of intelligence, and they can make huge bets and compete in ways that were impossible to imagine before. So I think it's a lot about how are we going to deploy AI in society that is going to change and shape markets.
I actually have a different perspective. So we were doing the innovation in the commodity trading. Very old-fashioned industry. We had the biggest data lake. We had a lot of interesting conclusions that were coming out of there. And then you face the reality. You have to compete with the biggest traders in the world with gigantic amount of capital, who have great risk management systems, who have all the relationships. And what you're forced to do constantly is to take more on the edge decisions, to take more risk in order to be able to compete with the big boys. So you start to understand very quickly you're either very, very innovative, or at some point by taking more risk and having a smaller balance sheet, right, you are going to basically face the extinction. And I think this is the reality that we are facing. Look at all the technology giants that we have. It's Fabulous 5, right? Fabulous 6, each one of them dominating in their industry. Nobody's even close to that. And once they become that dominating engine with tremendous amount of capital, almost impossible to move them. Will be the same story, one-to-one.
Eric, you're the tiebreaker.
Yeah, well, I'll play off both. Look, there's always a debate between centralized, federated, and to what extent do the hyperscalers dominate, and practically speaking, how you can compete with that, even at the scale they're already at. I'll riff on both of them. I think separating out the world of facts from the world of opinions and perspectives and forecasts and so forth, Addepar largely deals in the world of facts, first and foremost. So what is the world exactly, very precisely as it is today? So for each portfolio, for every position, transaction, tax law, pricing, reference data, how do you actually organize that data? So again, from the perspective of investors, you're not comparing apples to oranges to pears. You can actually compare apples to apples to evaluate, in fact, this investment did better than that investment, and now I'm considering the future. What can I glean from that? And this is where you flip into opinion and different perspective. And so taking, whether it's large models that you're fine-tuning with your own data, whether you're building small models, whether you're chaining models together, this is actually where I think, the federated world, the centralized worlds, it's all going to point us to more hyper-personalization at scale. And that, again, benefits retail investors, institutional investors. It allows more of the world's capital to get put to work constructively and productively to invest in the best ideas and keep going.
Eric mentioned facts, so let me actually throw a fact. If we exclude capex that was put by technology firms, obviously practically all in AI in the United States GDP growth has been basically flat. So all the growth that you see in the United States is a pure capex going into AI. Now, each one of them invests hundreds of billions of dollars, and they receive very little cash flow. They understand they would not be able to recoup those hundreds of billions of dollars. Why do they do that? Because they believe winner take all type of the environment. Maybe there will be several niches, right? There could be, you can split up, but they are putting all the money and betting everything because they believe winner will take all.
I think it's also a way to dominate the market from a psychological perspective, because if we look at the amount of capital that you truly need to build a model of the size of GPT-5 today, because they're talking trillions. Our largest model is 355 billion parameters, which in terms of benchmarks compares, to the top 3 models in the world. We spent about 50 million to train it. So I think AI is more accessible than we think today. It's just a matter of how we're using it. And by the way, I tend to agree that we need to use both concepts of AI, because we need to use the massive infrastructure that is being built by the guys who are paying the R&D expenses. I like that, actually. I think the first mover advantage is bringing value to everyone, but then you need to think second mover advantage and third mover advantage, where you need to build your own thing that is unique to you and which is going to enable you to not flatten your pricing as you move forward and not to be just one of the many, but to have that unique differentiator. And that comes only by building your own data sets, which then can become your own AI.
Well, ChatGPT is obviously subsidizing, right, each query that they receive. And I have just seen the post that McKinsey actually received some kind of the award of $1 billion something from ChatGPT, because obviously you're using their, because that's the cheapest type of the consultant you can have, especially if you can charge the consultant rates on the outside.
Well, now that I've been, I have to step away from my moderator hat and perhaps respond to that very quickly. I think, and perhaps we can then take that analogy into the financial markets world. I think for consulting, right, there's a phenotype of tasks that are definitely replaceable and can actually be performed faster and in some cases better with both generative and agentic AI. I do personally believe very, very certainly there's a quality of human decision making and human influence that consultants bring to the table that is, at least for now, fairly irreplaceable. But on the topic of replaceability of humans, I want to pick up on something you spoke about, Eric, which is, there is a clear identified pool of value in automating back office operational tasks. But then you also talked about how at Addepar, one of your kind of core missions is to bring facts to the table, bring objectivity. At a point in time in the near future or medium-term future, when AI is intelligent enough, that objectivity and that kind of picture of truth, the AI can also action decision-making on top of it. Do you think at that point in time there's a certain reckoning coming for finance professionals on the trading floor itself, or do you think that's not quite how it's going to pan out?
Yeah, that's not how I see it panning out, to be honest. I think
that's exactly the same for consulting.
Oh, okay, perfect. Well, I believe that anyway. One of the beliefs we had, I'll actually rewind a bit to 2006 at Palantir when we started building that business. It was 15 people. We had more of an intelligence and defense orientation. And it was really just saying, how do you, again, synthesize data from lots of different places so that people who are accountable for making important decisions have the right information to do that well. Around that same time, we, some of our friends like Gary Kasparov in the chess community, like a lot of the advances in like pairing an exceptional human being who's really, really gifted and really talented with a well-crafted, well-trained, computer in that case. That was actually a lot of the inspiration for how PayPal ended up solving for fraud. Is you build advanced models, you assume an adaptive adversary, and you need a well-trained team to keep evolving the model. Because as the adversary continues to become more advanced, you can't anticipate everything ex post, so like you just got to keep refining it. I think that principle holds with all the advances in AI, so as agents get more and more sophisticated, and agents can you can offload a lot of the work, say for a data operations person or a compliance person or what have you, you're still going to want a well-trained person ultimately to be able to be in the loop. Maybe they don't need to be able to in the loop on every single decision, but you want them there. So the AI is truly like a companion where you get an enormous amount of operating leverage and a lot of lift from that. I don't really see it though, where ultimately you're just going to like get rid of all the people and have the machines do all the work. I think you're going to still need a human in the loop because the world is a really complex place and you actually want humans to use judgment to really just ask some of the deeper questions that, yeah, maybe at some point in time in the very distant future, AI gets there, but I'm pretty skeptical.
I'm happy to actually give a real-life example what we have done. Whenever you put together a transaction, you send the business confirmation, and then you put a contract. And we are in the trading business, so there is a lot of the business confirmation and the contracts that we need to generate. So what we have created is basically a data engine behind that, based on the names of the counterparty, pulls up all the contracts and the business confirmation with that counterparty or with that product. And so you see the previous history, and what the AI assistant helps you is suggesting different optionality that you might want to include into the contract. So basically, instead of having a lawyer drafting, we actually have a much more intelligent tool that picks up based on a couple of the best templates that we put together, and then suggests a number of the optionality that we might want to include in order to maximize the value. So basically, that's a very simple tool, but very efficient of how we reduce the amount of the legal involvement that we need.
Right. Eric, you pointed out human in the loop, and I think on that I'd like to take the conversation to Uljan, to you for a bit. You know, inherently, for human to be in the loop, there's this assertion that you have to be able to trust the AI solution, right? And on the topic of trust, it's not only about developing AI solutions that produce output that is as expected, but also there's something about ownership of that output. Given that's kind of what you do at Domyn, I'd like to get your kind of thoughts on that as well.
Absolutely. So there is an aspect of state of the art of the technology, right? So a lot of people think that AI is a flying car, it's a self-driving car. It's actually a good electrical car with limited autonomy. It will be a flying car, but it's not yet there. So once you understand that, then you can implement it in ways that can build the trust, such as, for example, combining language models with data science, having governance systems that escalate to the human when needed, and having this conscious risk framework. But then when it comes to intellectual property, and as you said, different type of trust is who owns the AI. So at the heart of every organization, at the heart of individual freedom, at the heart of democracies, sits intellectual property. This is where we base the rule of law most today in open markets. With AI, this is going to change, especially with Gen AI. So putting your data into a model is like putting sugar into a cake. Once you've baked it, you cannot take it back. It's a chemical process, so the model is the data. So what this means is that if an organization is baking their data into somebody else's model, they are exporting the heart and the soul of their business into another model. Now, this is not true for intelligence that you're getting from the outside. So if I'm doing market research and I'm using, whatever chatbot out there that is summarizing the whole web in seconds, I'm getting value and I'm paying, a few dollars for amazing intelligence. But if I'm processing the data of my clients, if I'm processing the data that I build internally, if I'm an engineering company, for example, we're working with one of the largest shipbuilding companies in the world. They have 100 years of intellectual property on engineering, and they still run their data centers offline, out of the cloud. So there is this huge part of the regulated markets where more than 70% of the workloads are actually running on premises, where in order to innovate, you need to bring the model next to the data and you need to own the model. And not everyone can build that. This is why we strongly believe that in order to have trustworthy AI, we need to democratize these models and enable organizations to own them. So a true open model is not just opening the weights and making it open source, but it's the organization can get this artifact, they own the IP, they have their rights into it, and they have the recipe for then continuing to train it and make it their own model.
Right, clear. I think we have a few minutes left, but before I wrap up the conversation, there's a QR code that will appear on the screen behind us. The question will effectively read what percentage of your portfolio you will trust to an AI system. And I think on that note, I would love for the three of you to make your argument on if and how much of their individual portfolios people should trust to an AI system.
Could I ask some clarifying questions?
I think it depends on your net worth.
Yeah.
How much are you willing to lose?
Well, maybe if we were to abstract that question, right? What do you think is the readiness of AI systems today for retail investors, as you see in the room, to actually trust their investment decisions to such an AI system? And I think some of that is in the spirit of democratization, Uljan, as you were talking about. So perhaps we start with you and then we end with Eric and with Boris.
I think we can have very safe, autonomous decision-making with AI if we don't just think LLM first. Right. If we combine an AI system with multiple signals, we can reach a level of, I'm not saying human decision making, but extremely aware, multidimensional intelligence, where you have risk and signals coming from outside. You have your own internal inputs, and then you have the user profiling. So just as an example, you can build the system in a way that it can be trusted, and you can potentially enable it to manage a client's portfolio. But the risk, I think, for high-frequency trading, for example, it's completely different from how you manage a portfolio for a passive client. So it depends a lot on the use case. I think we're not yet there for high-frequency trading, but when it comes to more normal wealth management, it can be fully automated.
Yeah, I mean, you're basically competing with, passive, like index tracking, right? And I'd ask the clarifying question, what's the fee structure that you're going to now deploy into this AI system? And what's the track record for actually beating your fairly low costs, again, public aspects? I think, I actually do agree. I think using the fact base that I was mentioning before, and taking into account each individual's goals, objectives, preferences, constraints, time horizon and so forth,
right,
you can start like pretty rapidly iterating on that, but we're still at the starting line. So I wouldn't do that at scale today, but I think I tend to be a data-driven guy. Once you actually get that tuned and you can start revving that, like I do think there's something there, but I'd be, again, pretty skeptical right this moment.
All right. Boris, you've been the voice of dissent on this panel so far. I'd love to hear
Happy to play there. Well, I actually have done pretty badly with my personal investments, right? It appears I sell always at the wrong time. So I think I will do better than what I have done personally. But in reality, guys, in all seriousness, I think the world feels more and more like gamification, right? It feels more and more computerized. And so if significant percentage of people starts to use AI to make investments, it doesn't matter, even if I believe I have some intelligence edge or something else. It's about the flows, where the majority of the liquidity are going. So I will actually jump into AI so I can benefit from the crowd momentum rather than going against that. Because every time I was going against the momentum, life taught me a lesson. And I hope I learned by this point. So since majority of the people will be, it's an easier solution, and they will trust AI more than they will trust themselves, I think it will just pile up as more people are coming in.
Oh, fantastic. Thank you, Boris, Eric, Uljan. I hope you've convince some of these people to jump onto an AI solution to trade, but also keep it, to a minimum, bearing their net worths in mind. But thank you so much for taking the time today to be on the panel. Thank you.
Thank you.
Thank you.
Thank you.